How China is building a sanction-proof economy. Imagine a world where one of the largest global economies is immune to the economic penalties often wielded by powerful nations to influence international politics. Now, picture that country being China. This isn't a far-off scenario, but a reality China is meticulously crafting. As tensions rise and global power dynamics shift, China is strategically building an economy that can withstand even the harshest international sanctions. But how exactly are they doing it? Let's dive into the comprehensive plan China has in place to shield its economy from external pressures and maintain its growth trajectory. What is a sanction-proof economy? A sanction-proof economy is designed to be resilient against international sanctions imposed by other countries or global institutions. Sanctions are economic penalties or restrictions intended to influence a country's behavior, often used to address issues like human rights abuses, nuclear proliferation, or other actions deemed threatening to international stability. These can include trade barriers, financial restrictions, or bans on the export and import of certain goods and technologies. To be sanction-proof means having an economy structured in such a way that it can continue to function and grow despite these external pressures. This involves reducing dependence on foreign markets, currencies, technologies, and critical resources that could be restricted. It also means building strong domestic industries, securing alternative trade and financial partners, and enhancing overall economic resilience. Diversifying trade partnerships. One of the primary strategies China employs to sanction-proof its economy is diversifying its trade partnerships. By expanding its economic relations beyond traditional Western markets, China aims to minimize the risk of being overly dependent on any single economic bloc. Belt and Road Initiative, BRI. The Belt and Road Initiative is perhaps the most prominent example of China's diversification strategy. Launched in 2013, the BRI aims to enhance global trade and stimulate economic growth across Asia and beyond by developing trade routes reminiscent of the ancient Silk Road. By investing in infrastructure projects in over 60 countries, China not only boosts its own economy, but also creates a network of interdependent economies less likely to support sanctions against it. Strengthening ties with emerging markets. China has also been actively strengthening its economic ties with emerging markets in Africa, Latin America, and Southeast Asia. These regions are rich in natural resources and offer vast markets for Chinese goods and services. By securing trade agreements and investing in local industries, China reduces its reliance on Western economies and mitigates the impact of potential sanctions. Financial system independence. Another crucial aspect of China's strategy is developing an independent financial system. By reducing its reliance on Western financial systems, China aims to protect its economy from potential financial sanctions. Internationalizing the Renminbi, RMB. China has been promoting the use of its currency, the Renminbi, in international trade. Efforts to internationalize the RMB include setting up currency swap agreements with numerous countries and pushing for its inclusion in the International Monetary Fund's Special Drawing Rights, SDR basket. Increased use of the RMB in global transactions reduces China's dependence on the US dollar and the Western financial system, making it less vulnerable to financial sanctions. Establishing alternative payment systems. To counter the dominance of Western financial networks like SWIFT, China has developed its own cross-border interbank payment system, CIPS. CIPS facilitates international transactions in RMB and serves as a potential alternative to SWIFT, particularly for countries facing US sanctions. This system allows China and its trading partners to continue conducting business without relying on Western-dominated financial infrastructure. Building technological self-reliance. Technological self-reliance is another pillar of China's strategy to build a sanction-proof economy. By developing its own technological capabilities, China aims to reduce its dependence on foreign technology and mitigate the impact of technology-related sanctions. Investing in research and development, R&D. China has significantly increased its investment in research and development over the past decade. The government's Made in China 2025 initiative aims to transform China into a global leader in high-tech industries such as robotics, aerospace, and biopharmaceuticals. By fostering innovation and developing cutting-edge technologies domestically, China reduces its reliance on foreign technology and enhances its economic resilience. Developing indigenous technologies. China is also focused on developing indigenous technologies in critical sectors such as semiconductors, telecommunications, and artificial intelligence, AI. For instance, in response to U.S. sanctions on Chinese tech giants like Huawei, China has accelerated efforts to produce its own advanced microchips. By achieving technological self-sufficiency in these key areas, China can better withstand external economic pressures, enhancing energy security. Energy security is vital for China's economic stability and growth. To build a sanction-proof economy, China is taking steps to secure its energy supply and reduce its vulnerability to disruptions in global energy markets. Diversifying energy sources. China is diversifying its energy sources by investing in renewable energy, nuclear power, and natural gas. The country is the world leader in renewable energy investments, with significant projects in solar, wind, and hydroelectric power. By increasing the share of renewables in its energy mix, China reduces its dependence on imported fossil fuels and enhances its energy security. Establishing strategic reserves. China has also been building strategic reserves of critical resources such as oil and natural gas. These reserves act as a buffer against potential supply disruptions and provide China with greater leverage in international energy markets. By securing a stable energy supply, China can maintain economic stability even in the face of international sanctions. Strengthening domestic consumption. Boosting domestic consumption is another key strategy for building a sanction-proof economy. By cultivating a robust internal market, China can reduce its dependence on exports and sustain economic growth, even if external trade relationships are disrupted. Encouraging domestic spending. The Chinese government has implemented policies to encourage domestic spending and increase consumer demand. Measures such as tax cuts, subsidies, and incentives for household consumption aim to boost domestic spending and create a more balanced economy. A strong internal market can absorb economic shocks and reduce the impact of external sanctions. Developing local industries. China is also focused on developing its local industries to meet domestic demand. By supporting small and medium-sized enterprises, SMEs, and fostering innovation, China aims to create a diverse and resilient industrial base. Strengthening local industries not only boosts domestic consumption, but also reduces reliance on foreign goods and services. Expanding global influence. Expanding global influence is a strategic move for China as it builds a sanction-proof economy. By increasing its geopolitical and economic clout, China can create a more favorable international environment and reduce the likelihood of facing coordinated sanctions. Multilateral institutions. China is actively participating in and establishing multilateral institutions to enhance its global influence. The Asian Infrastructure Investment Bank, AIIB, and the New Development Bank, NDB, are examples of China-led institutions that provide alternatives to Western-dominated financial institutions like the World Bank and the International Monetary Fund, IMF. By leading these institutions, China can shape global economic policies and build alliances with other countries. Diplomatic engagement. China is also investing in diplomatic engagement to strengthen its global standing. Through initiatives like the Forum on China-Africa Cooperation, FOCAC, and the China-Arab States Cooperation Forum, CAICF, China is building strong relationships with countries around the world. These diplomatic efforts help China garner support and create a network of allies that can mitigate the impact of international sanctions. Addressing vulnerabilities. Despite its efforts, China remains aware of its vulnerabilities and is actively working to address them. Acknowledging and mitigating these weaknesses is crucial for building a truly sanction-proof economy. Reducing debt dependency. China is taking steps to reduce its debt dependency, particularly with regards to foreign debt. By managing its debt levels and ensuring sustainable borrowing practices, China aims to maintain economic stability and reduce the risk of financial crises triggered by external pressures. Enhancing cybersecurity. As cyber threats become more prevalent, China is investing heavily in cybersecurity to protect its critical infrastructure and sensitive information. Strengthening cybersecurity measures helps safeguard the economy against cyber attacks that could disrupt financial systems, steal intellectual property, or compromise national security. Conclusion: a sanction-proof economy is one that can withstand external economic pressures, maintaining stability and growth despite international sanctions. China's multifaceted approach to building such an economy involves diversifying trade partnerships, developing an independent financial system, achieving technological self-reliance, enhancing energy security, boosting domestic consumption, expanding global influence, and addressing vulnerabilities. By implementing these strategies, China aims to protect its economic interests and maintain stability in the face of international sanctions. As China continues to strengthen its economic resilience, the global economic landscape will undoubtedly be influenced by its efforts. Understanding these strategies provides valuable insights into China's long-term ambitions and its role in shaping the future of the global economy. Don't forget to subscribe for more videos like this.